Daryl, is it going to do the job?
Yeah, I think that's the big question right now about this tax reforms. I think basically that's pretty good analysis by your guy in New York. That's effectively looking at the financial impact, and I think broadly speaking, the consensus appears to be that at least the initial impact will be on corporate earnings. You're going to see a one-off bump up. Particularly for those companies that have been paying pretty high taxes. I think that the jury is pretty much out in terms of what is the broader implications on the US economy. And I think if you listen to President Trump, he's pretty bullish about corporate investments. CapEx is probably going to pick up. More business coming back onshore into the US. And I think there's still quite a number of skeptics out there which are really questioning whether that will actually materialize. So I think that's the bigger question that we have to see whether that happens or not.
Daryl, I'm just going to play devil's advocate. So the idea is these corporates have more money. They then pay their workers more. Had a nice announcement from AT&T earlier. The point being, they've got a lot of money on their balance sheets as it is. They've not been giving big wage hikes to their workers. Why should this make any difference?
Yeah, no, that's a good point. Effectively, there has, even though if you look at the unemployment rate in the US is pretty low, we haven't really seen very much wage push inflation come in yet. So I think you've got to really look at it, whether business improves, whether the top line, the bottom line improves before really that might translate to a tighter market. There's a lot of different commentators that have come out to basically say that due to technology disruption, productivity increases, whole bunch of different reasons that have been sprouted to actually push towards why wages haven't actually moved up. But yeah, the tax moves may not actually move the needle in this regard.